I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market lost ground for most of last week as the correction deepened, with all focus on Russia and Ukraine and that conflict that has become a war. The week started out with hope changing to fear after Putin's 57-minute speech laying out his perception of history of the Ukraine, all about laying out the legal case for an invasion. The first incursion brought some mild sanctions, and then a full invasion brought more sanctions on the oligarchs and lockouts of Russia from U.S. banks and financial markets, and many countries joining in. Still, Russia moved unabated in the Ukraine towards the capital of Kiev, and some say that the sanctions were just not strong enough. Today it was announced here on Friday that Europe was going to put sanctions actually on Putin and Lavrov. So that was starting to get a lot worse. The stock market down Monday on the holiday day of the futures moving lower, and Tuesday and Wednesday and Thursday morning big declines in the stock market and stock indexes. Thursday morning there was just a huge amount of selling, and then all of a sudden short covering came in with a big reversal, one of the biggest we've seen in a long period of time, as the NASDAQ, which was down 4% on the day, closes up 3% on the day, a 7% massive reversal, as the put buyers that bought all of those puts at high implied volatilities plain out puked. And the rebound began, and it began to build on itself and continued actually through Friday. That's what happens in bearish markets, where you have tiny time windows where you can get upside squeezes, and those big upside moves, those spikes, well, they come in markets that really are not bullish. Friday, a lot of news came out, and the S&P 500 was down about 50 points at one point. And then all kinds of things started to leak out about potential negotiations between Ukraine and Russia. UK President Zelensky said he was willing to talk about a status of neutrality. And Putin and his folks out there said that they were willing to have some discussion, talked about meeting in Minsk, but then put a qualifier on it, and that's only if Ukraine surrenders. Well, it didn't matter, because the futures, which were still up a little bit, ended moving up very strongly here on Friday to plus over 70 points, and at midday now, while I'm doing this recording, it's sitting up 70 points. This is another 200 plus point reversal in these crazy upside spikes. Bigger issues are really out there still, and the question is, will China go after Taiwan, as they see these responses don't seem to mean all that much as far as all the sanctions goes. Of course, it's really early, and this really could be the start of something bigger. Why would Putin go into Ukraine unless he had a much bigger plan, some bigger idea for something? And he's out to attack capital markets, certainly, and probably doesn't like the reserve status of the U.S. dollar, and the United States and the West all control the financial markets. So there may be something much bigger in here. Friday, the news came out about the PCE deflator. That's the Fed's favorite inflation number at 40-year highs. But of course, that doesn't mean much in a market like this that's focused on geopolitical issues. There's so much speculation out there whether this is a correction or a bear market, and all that seems pretty ridiculous with the destruction that we have seen in so many sectors of the market. Take a look at this slide, and I think this is some really valuable information. Correction or a bear market, or does it really matter because this destruction is so huge? Look at the size of the drawdowns from the peaks to the date February 22nd when they did this calculation. The sources Charles Schwab, Bloomberg, Real Money, they all put this out. And you can look in here, what you're looking at is the S&P 500, the NASDAQ, and the Russell. Here's your year-to-date returns as of that date. It's not far off from there right now. The maximum drawdowns you can see in here are pretty significant for the indexes. But when you start to look deeper into the indexes, the average member drawdown were 14% for the S&P 500, 23% for the NASDAQ, 23% for the Russell, and at least 10% down from its highs. Look at these numbers in here, 69, 76, and 86%. But then it starts to look a little deeper here. At least 20% drawdowns. You could see these numbers. 83% of the Russell had at least a 20% drawdown, 73% of the NASDAQ, 53% of the S&P 500, and at least 50% drawdowns. Well, the S&P 500, not that much, only a couple percent, as you can see. But when you look at these numbers in here, the NASDAQ and the Russell, massive amounts, huge percentages there of 50% drawdowns in those indexes. So when you look at this, you can see that the amount of these drawdowns and the number of stocks that have had these huge declines is really very significant. Of course, all along we have talked about the fact that the indexes have really been hiding what are the big declines in the market. So, when you have these giant declines and these stocks that are down that much, stocks, when they rebound, they could be giant rebounds. And, you can get 1/3 or 1/2, a third of 50% retracements on the upside, and you get massive bounces in these markets. And with all that, still, I believe that this is really a big bear market, and maybe even a secular bear market with years to come. That would mean that it would be like one of those long phases where you have a lot of movements up and down and some cyclical bulls and cyclical bears, but overall for long periods of time you don't get returns on stocks that are significant and lots of periods of significant drawdown. For now, maybe another month or so, that's what our timing has been, we still see trouble in the markets despite the big rebound that we've seen these last couple of days. And watch the end of the show because I'm really going to break that down for you. These beaten up stocks, they're going to catch bids. And for a while, we might even see, and I'll show you into the summertime, that the market could look pretty good. But I think that'll be a big trap. But now we're in a period really of great trading opportunities. These big rebounds, as you can see. Take a look at Square and Etsy today. After they had lost massive amounts, they have big gains. Square up 24% on the day, and Etsy up about 13% on the day. So lots of opportunities out there in what I think is going to be a widely fluctuating market and overall long-term problems. Make sure you watch the end of the show because you will see what I'm talking about. For the week, major indexes really mixed, these wide swings in here. Not much change overall in any of the indexes. Bond market, 30 years up about a point, 10-year yields up about 3 basis points. So it was kind of mixed market as the 10-year market 10 years moved to the downside while 30 years moved to the upside. And again, wide swings in all of these markets. Talk about wide swings. Gold for the week down about $12. It had a huge range on this panic on Russia. It made a high of 1976 in the gold market. It's now trading 1886. It lost $90 off of that panic bid. And the silver market, well, similar action. Silver now trading right around the $24 number. It traded up to $25.70 in that huge panic. I have more to tell you about gold and silver, and there's a video you're going to want to watch that we put out, and I'm going to give you a little taste of it, our big picture analysis coming up, and you'll be able to see the silver market and a couple gold stocks. Dollar up about 0.7% on the week. It was another one with a panic bid that went up, moving down pretty sharply here on Friday, and it's still stuck in what we call a broadening or megaphone pattern. And that's all about whether or not the dollar is a safety bid or not, and whether or not the Eurozone has got bigger risk than the US or not. And they're both really stuck in these broadening patterns. And you can see that in future speak that we show every single Wednesday. Oil market, again, wild market, up about $1 on the week as it trades right now around 91. And made a high of over $100. So again, so much panic in the market, and that panic is coming out of the market right now on these hopes that there is going to be some negotiation between Russia and Ukraine. And Ukraine, are they about to surrender? Is that what it's going to take? Well, don't be surprised if we have huge swings still. And right now, with the market having recovered significantly, the next swing is probably to the downside. Coming up, I'm going to give you a preview of this big picture analysis, stocks, bonds, gold, and silver. I take a long-term look in there, and the preview we're going to give you is on the long-term look in silver and a couple of gold stocks where I show you that analysis. And then coming up is the stock market. I'm going to bring you some detailed cycle analysis on the SPY that I think you're going to find fascinating. Make sure that you do go to our website and explore that. If you're new, you could become a free member or maybe a level 1 member and really get a good handle for what we do. On YouTube, please subscribe to our channel and click the notification bell so that you know when we put videos up there. And do like this video. Give us a thumbs up. On Twitter, follow us at askSlim. And if you have any questions about what I'm going to present to you coming up, memberships or questions on our huge offerings of education and analysis, you can write to Matt at askSlim.com. Here is a preview of big picture analysis. What I did this week, RV is out of town for the week, so I took over the Thursday video, and I did a big picture analysis on the stock market, bond market, gold, silver, and precious metal stocks. This is an amazingly comprehensive video, so you need to be a level 2, 3, or 4 member to see that. What I'm going to do now is I'm going to show you a preview, and you can get an idea of the style of analysis as we look at the long-term conditions of silver and the intermediate term also. And then what we do is share a couple of gold stocks with you so you could see that analysis. So this is a preview of what is a pretty long and extensive video, and I want you to enjoy that. Take a look here at silver on the weekly /SI on the weekly, and we'll try to fine tune this. You can see silver broke through those VTLs right over there, and it caused us to raise our downside objective in here. Now, the bottom of this is around 23.40 right over there. I'll take you out into June. So it's late May, mid-June is what that timing is. It really could get down here to under $22. It makes most sense for that to happen. You can see we keep having to upgrade it based on the way these patterns change, and we're always going to do that, because we're flexible. But this was a panicky morning that you see in here that occurred this week, and it's not able to hold. So you see a lot of choppy movement in here, and then this final down move right over here. Again, this points to May, June right over there on the weekly chart, and on the monthly chart, this points right over here to May, June, and all of that is synchronicity in 1, 2, 3 cycles right over there on the monthly. And then looking at here on the weekly, on the shorter cycles, 2 more cycles that point to that. You have 5 cycles between weekly and monthly that are pointing to the downside fairly soon. and it's you can see it's not really going to be able to hold up very well in here, and will be maybe even downgrading that again a little bit depending on how it acts. Silver, it's much more an industrial metal than gold is, and the silver market would be suffering more from the potential worldwide economic slowdown and the disruptions in commodity markets based on the potential Cold War that you could get in here between, Russia and China and Iran and Korea, all of them, North Korea, all of them kind of teaming up against the West. And I'm afraid we're going to start to see those alignments and the desire to upend the control of the reserve status of the U.S. dollar. U.S. dollar got a big safety bid today, but I think it's at an area where it's not going to be able to hold up, and if it gets a big breakdown, there's going to be a strong message there. That may be later in the year when these precious metals, can do a lot better. So when we're looking at gold stocks, what you want to look at is the configuration and the basin here. So this is really important, and this is gold right in here, and I've overlaid gold on all of the gold stocks and overlaid silver on all of the silver stocks. So this is the gold pattern right in here, and this black pattern is a minor pattern, and this blue dotted one is a dominant, which is following gold very closely. So you can see the low right here on that blue one following gold, the low right over here, low right over here, that's where it's following gold. And then you could see the minor patterns, how well it's following those also. So where are we right now? It really shows that the gold is in this area where it's still moving up, it kind of sideways, remember, but this now is really moving up and momentum got strong. So AU, which is Anglo Gold, is in a very strong pattern. Base built and now starting to move up here. We would expect it to get up in this move up to about maybe up to 26. Now remember that time frame out over here. This is that May low right there. This is a June low right over here on this cycle. So what it says is rally come down into that time frame right over there. And when gold and silver, if they make their bottom similarly, then it's possible that this is going to do something like this, and you can see how it would then move up together with gold and silver. So we're looking at the gold pattern, we're looking at the dominant and the minor patterns in here in AU, and the breakout that occurred right over there. Why is it a breakout? Well, it got above this cycle peak right at that point, and that is another positively configured cycle, only in the fourth week of its upside move of the minor cycle. So that is a very bullish look at a gold stock. That's AU. Again, you could get pullbacks in here, but the time frame is such that the real pullback is out in that May-June period. So you're in a favorable period right now. This one, when you look at Alamos Gold, this one is not strong. You see that negative cycle, negative cycle, negative cycle, and this last one right in here probably not being able to get very far. So when you look at Alamos, you can't get excited. This is not one of them that you're going to buy because the patterns are not great. The momentum is just starting to turn up in here compared to the powerful momentum we've seen in other stocks. All right, I hope you did like that. And of course, if you have any questions on the analysis or you want to become a member to watch the full video, do write to Matt at askSlim.com. Coming up, well, stock market analysis. I'm going to show you some really good stuff as I took a deep look at our style of analysis. But first, just give me 22 seconds to take a look at our top level memberships right now. This is the final days of our level 4 and level 4 plus special trials. Well, you can get level 4 35% off our quarterly for only $303.75. That is only $101.25 a month, saved from $159, and includes everything in levels 1, 2, and 3. And also our level 4 plus, 35% off for that. And this is really a hands-on, extensive step up from level 4, $155 a month versus $239. You can get that quarterly for $465. Custom charts and exclusive support from the askSlim analytical team. There are only 6 spots left. You must reserve now. That includes everything in levels 1, 2, 3, and 4. Go to askSlim.com. You'll find that on the top of the main page, that little green 35% off. And questions or for that link, write to Matt at askSlim.com. Here's the stock market analysis. We're going to look at a short-term cycle analysis, the construction of that short-term analysis, and then I'm going to look at intermediate term, looking at the weekly chart. This is going to be very interesting as we look at the market and how we have done this analysis that has told us about the movements that we expected. So we'll take a look at the short term. This is kind of a lesson also. Take a look here as I'll move over to SPY. Now, what I want you to see here is this is of course, a candlestick chart. And on here we have a couple of indicators. This is the slim ribbon right over here. This is the slim ribbon PO, which is the signal indicator for the slim ribbon. The slim ribbon right now is showing you a negative condition, as it actually has basically since here it neutralized for a day and then turned negative again. And now you're getting this big rebound in here. And right now you can see it is still red and likely to turn down. But we're going to take a little deeper look at this analysis. What I want you to see here is that head and shoulders right there that actually signaled the top of the market in the SPY. This again is a daily chart of SPY, and we're going to go through the different steps in here of this analysis. So right now you can see that head and shoulders, and you can see that the momentum is actually negative. Let's take the next step in here and we'll put in our cycle brackets, because these are our guides essentially to the cycles in the market. These brackets are called our drawing tool called cycle brackets, and you can see there's a minor one right in here and a dominant one right here, and each of these is called a harmonic family made up of these minor thirds and the dominant cycle. And what we see is that when we get into the period where they're kind of nesting, there's a decline, and then you come out of the nest and there's an advance. Now you see these 1, 2, 3 cycles right in here. Well, this is how they actually formed, and you can see how that makes a head and shoulders. When this dominant pressure right over here is strong, it prevents this rally right here from making a higher high, and then it creates the head and shoulders. So that's just a little basic lesson in here. And you can see that there are 1, 2, 3 cycles in this big family right here, and 1, 2, 3 right over here, and here only 1 and 2. That is suggestive that you're going to see a failure of this rally at some point, and then moving down one more time. Now, this was a panic low right over here, and that came down and hit some important numbers, as I'll show you. And then you get this very significant rebound in here, and it's moving up into the slim ribbon. Now, often the slim ribbon is support or resistance, and in this case, it got a little through it and came down again, and now getting back up to it right over here. And this rally is likely going to fail and then get one more move to the downside right there. Let's take another look at it as we look at things a little more with a little more depth. And you can see in here those periods of risk. In other words, those periods where this nesting cycle comes in right here, and that you get your bigger declines, like the end of it there and there and there, and that would put you out over here. That means that the people that are buying right over here are likely buying premature. We had talked about a low sometime beginning in mid-March, and that's what this comes out to sometime here. So after this rally is over, you enter into this period of risk and the next move to the downside. Now let's take one more look in here at a fully developed cycle chart with our analysis and projections, and you can see that right here. So we're looking at the reality of how the big harmonic family right in here traded, as you can see right there, makes a double top. Does this, makes that head and shoulders that we talked about, hits resistance falls off, has a rally to resistance, a sell zone, falls off, and then this last rally coming back up to the sell zone. Some important numbers as we look at this, and I'll advance it right there. The intermediate charts off the weekly have resistance, as you can see it getting right up here. Top of the minor resistance right there is at about 440. This right over here is at about 437. So you can see it's getting up towards that right now, and then likely to fall off for one more decline. Now, this is actually an important low. It stopped very much on this weekly support right over there and had this rebound. So maybe this period is only a test of that low, and then a significant declining phase that we had talked about for so long will be over with, and then we'll be getting into a period where, well, maybe a lot of the stocks will be getting ready for some pretty significant bounces. So that is a look at the four stages. Let me take you back through there again, looking at just the head and shoulders right there, and our indicators, looking here at the cycle brackets and at how that formation of the head and shoulders came, looking here at those periods of risk and how there's one coming up again, which is likely to test that bottom. And here is the one with the full analysis on there and the projection, which takes you to a test or lower of this low that we made here 2 days ago, sometime out into this second to third week of March is the way that aligns. So let's take a look at the intermediate analysis, and we switch over to the weekly chart right here, and I'm just going to blow this up. And again, we have what are cyclic harmonics on this weekly chart. Let me just bring it right out over here so you could see this a little bit clearer. The bigger patterns that we looked at right over here, and you could see the minor cycles right in here, also minor thirds. It doesn't always have to be minor thirds, but in this case it is. And each of these cycles, 1, 2, 3, 4, all of those in this upward trend. But this one then failed right there. And here I put in those 3 cycles from the daily chart. Here's that last rally that we were looking for that is right in here, and the likelihood of one more move to the downside. This is mid-March to somewhere around the first or second week of April, and it came down 14.4%. We were talking about getting at least to the 23.6%. It got below that. That was the 15% correction line. So the question is, in these next 2-3 weeks, is it going to move down and just take out that low right over there? Or is it going to move down and get to like the 20% bear, that next support levels right over there, which would be around 380. So this low right over here around 410, and then the next low right over here around 380. That's what we think is going to happen. The highest probability. We looked for this decline and it came really well. Note in here the momentum is negative, and despite the fact that you have this big rebound, you are still in a negative condition on the stock market. And we don't know what the news is going to be out of Russia, Ukraine, if they're going to talk, if they're going to need to have a surrender before they're going to talk, or if all of that is just a bunch of garbage and Putin has a big plan to really take over all of Ukraine no matter what. What we believe is that he doesn't want Zelensky to stay in there in power, and I think he's probably asking a lot, and I think this upside move that you see in the market is just very premature and very much at risk of, well, the news turning sour again. Very significant upside rebound in here that you can see, but getting, as I showed you here on the daily chart, into that resistance sell zone, and the likelihood of coming down one more time, and still in this risky period of risk. And then if you look out over here, so I said this is a 1 to 3 month analysis. This is 1 month right over here, one more move to the downside. But the timing of the cycle trough being mid-March to late April, what's the probability of this being the low, the final trough? Well, that's really small. And then this period over here is this period of upside rebound. Will that be a test of the high? Will this rally in here get you way up over here? Many times in bear markets, you get up about between 2/3 and 3/4 of the way up, and then it fails. Some have markets that some indexes get to the highs and some miss. I actually think this one will not do that, but you'll get a false rebound of a lot of these stocks out into May, June time frame out over here, and then the next leg in the big risks, July, September, October. Those are periods of a lot of risk out there again for what might be the next leg to what I think is this bear market. So right now we're looking at this rally in here to fail fairly soon and to get down and test that low there, 410 in the SPY, or potentially getting as low as 380 if this turns out to be a full-fledged downward bear move. I doubt that. I think the highest probability is getting down to that near that low of 410 one more time, and then wrapping up what is the third cycle right in here, aligning with the daily chart that I showed you, and the second of these downward cycles that you see right in here, and that giving you the bottom that we were looking for and the upward move out over here. If you're buying now, again, I'm saying there's a pretty good probability that that is premature and that we're going to see the markets move down again. That's it for our analysis on the stock market. I hope you found this to be extremely valuable. Please do go to our website and explore, look around, become a free member, level 1 member. If you're on YouTube, subscribe to our channel, click that bell, like the video, and watch our member videos in the playlists. If you're on Twitter, follow me at askSlim. And for questions on all of our offerings, anything on our special, we're wrapping up level 4, don't forget, on our specials. You can write to Matt at askSlim.com, and he will answer those questions for you, give you the special link, and you will enjoy being a level 4 member. Remember, you need to be a Thinkorswim account holder as a level 4 member, our preferred broker. So please do sign up through our link on the homepage at askSlim.com. That's it. I want you to be extremely careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to